Now, over the last few weeks, you might have seen alarming signals from major institutions and banks that recession is coming. If my calculations are not wrong, we might already be in the middle of recession as US reported negative GDP in the last quarter. To be exact, US GDP dropped by 1.4% year over year between January and March of this year. And if this trend continues for another quarter, then we are officially going to be in recession. I hate to say this, but I told you so. But this video is not to prove how and why I was right to boost my own ego, but to talk about what steps you should take during recession. Not a financial advice. Hey everyone, it's your self-centered, egoistic, not a millionaire YouTuber here, aka the Frugal Investors, and welcome to my channel. In this video, I'm going to walk you through 3 steps you should take to preserve and grow your wealth during the time of recession. The first step is don't get emotional, or as Phil says,
don't be stupid. Stupid? This is not a joke. You're a joke.
This year alone, major US indices were down by 10 to 22%. Dow Jones, which tracks the top 30 blue chip industrial and financial companies in the US, has been down over 9%. S&P 500, which tracks the stock performance of top 500 US companies, also considered as key indicator of the US economy, has been down over 13%. And Nasdaq, which tracks the overall tech sector, is down by over 23%. So during times like this, when there is blood on the street and your stock portfolio is in red, it can be very tempting to just sell everything and stop the pain of losing money. I'm done, I'm selling everything. But that's exactly what you should avoid doing. Yes, this is not a time to get emotional and sell, but to hold and double down on your investment as they are on a steep discount. In recession and corresponding negative market environment, it is good to remember that better investment days are probably ahead. And this is explained really well on Investopedia. I will link the article in description below. But what it says is, in order to understand the state of US economy and how recession impact investors, it is really important to understand business cycles. And in general, there are 4 phases in business cycles. There is peak, when economy is healthy and growing, where stock prices often reach all-time high, as we saw in 2021. And you know there is a saying, right? What goes up must come down, which applies perfectly here during phase 2, which is recession. During the recession phase of business cycle, income and employment decline. Stock prices fall as companies struggle to sustain profitability, which we are dealing with right now as we speak. Then there is a through phase, which might feel like a cold and harsh winter as productivity and employment drop. But that's usually the bottom of the market before it recovers again and stocks prices rally towards the moon, which is the last phase of recovery in business cycle. That being said, no one really knows how long each phase might last. It can be months or even years before we might see a stock market recovery. That being said, there is a really good study published by Drow Wealth Management earlier this year that talks about stock performance before, during and after recession. They took a look at 11 recessions from 1953 post-Korean War to 2020 COVID pandemic. And they saw that on an average, recession lasted for over 10 months. And even though market was negative before and during the recession, they did see 90% of the time market did recover in the following year by over 16% and 20% in the next 2 years after the recession. So this study does suggest that you have a higher probability of actually growing your wealth in long term if you just continue to hold on to your investment and double down by dollar cost averaging during the recession. And that is it for today, everyone. For any reason, if I did provide you any value today, please drop a like on this video and subscribe to my channel. Feel free to check out my video where I talk about ETFs that you can consider to buy during recession. But until next time,
don't be stupid. Stupid?